Hi, my name is Mark Polton. I'm a buy and hold real estate investor in the greater Charlotte, North Carolina area. You may be wondering, where's my normal white shirt that's all beat up? Time to retire it until Home Depot gives me another one. So, I've been listening to a lot of Rich Dad Radio recently, and they have, very respected names on there. Most recently, Peter Schiff. I used to listen to his podcast, came on 2, 3, maybe 4 times a week. Really, really tough to listen to. He is all doom and gloom. Gold is the greatest thing that's ever hit. He is the smartest man ever. And, everybody's going to suffer and burn in hell. That's basically his podcast. And I don't disagree with his conclusions or how he drew them. I do disagree with a lot of the potential outcomes. He thinks that Trump is going to lose, and he may, and that socialism is going to come in because capitalism is to blame. We'll find out in the next 90 days if that's true or not. But, he thinks that we're in for a huge amount of inflation, which, is definitely a logical conclusion from all the money printing. Robert Kiyosaki on Rich Dad Radio will also have on other guests who say, hey, we're going to deflation and gold's going down to, $1,000 or less, where, Peter Schiff thinks gold's going to $10,000 or something at least more than what it is, and that's your hedge against inflation and what's to come. So it's hard to know who to trust. It's hard to know who to believe. Nobody obviously has a crystal ball. Peter Schiff has been saying this for years, that, this is going to happen. And I guess eventually, if you keep saying it long enough, you can finally say, oh, hey, I was right. Certainly not right in the short term. Might be right in the long term. He may not be. Who knows? I would think that there's going to be a correction of some sort. We can't keep doing this, but these are things that as real estate investors and entrepreneurs, we need to really kind of be paying attention to. Right now the dollar is the reserve currency of the world. And if you don't know what that is, then you don't really have a financial education. And you need to figure that out. And you need to understand the ramifications of that. The only reason the United States is able to do what it does is because oil is denominated in dollars. We are the reserve currency of the world, and there really isn't a better alternative than right now than the dollar. And America will fight wars to ensure, and we have fought wars to ensure that we stay in that position. So the Fed has printed trillions and trillions of dollars. I think they've digitally printed, $5 or $6 trillion this year, and that's a massive. It's so much money that I can't even imagine it. It's so high. I'm trying to get a loan right now for about $500,000, and they're printing $5-6 trillion. I mean, it's orders of magnitude more. But also, at the same note, real estate is a pretty decent hedge against inflation. A lot of people are mad at the 1%. A lot of people are mad at the wealth gap. A lot of people are mad at bankers and stuff like that. But the dollar's been devalued by well over 90% since the early 70s. And if you want to get mad at anybody, get mad at that. Used to be in the old days, you could survive off of one income and do really, really well. The husband worked, the mom stayed home and raised the family. You could save money and you could retire off of your savings. All of that is gone. It does not exist. I doubt it's ever coming back. The Fed keeps interest rates artificially low. Robert Kiyosaki says savers are losers. And he's right, they are. If you're saving money, you're losing money. The interest rate that you're getting today, unless you're investing with somebody like me, you're not going to come anywhere close to the inflation rate. I mean, you might get a 5-year CD at 1%, 1.25%. I mean, geez, you're actually losing money. The value of your money when you pull it out of that CD is going to be less than the value of your money putting it in. Now, if you were to invest somebody like me, offers 5 or 6% on your money, depending on the term and stuff like that, backed by real estate, that's a different story. And if anybody's out there is looking to invest money, we have millions of dollars worth of property that we certainly can put up for collateral for, decent terms over, a decent amortization. You can probably make better money off of that than you can off of anything else, with a lot less volatility. Now, if you're a stock market guy, yeah, you can make a lot of money. You can also lose a lot of money. Tech stocks are getting killed yesterday and today. So, it's up to you. I'd rather have steady returns than unstable returns. But to get back to what I was saying about a hedge against inflation, when I was growing up, a 3-bedroom apartment when I was in high school in Tampa, Florida, town and country area, $400 a month. And that seemed like a lot of money to me back then. $400 a month today is nothing. It may be to you, but my rent roll is, I don't know, $14,000 a month or something like that. And that's not including the Airbnb. So, there's, $400 is nothing. I was looking, we're applying for a portfolio loan, so I got to put in all the information of, how much am I making off of it, taxes, property taxes, insurance, what I paid for it, what it's worth now, yada, yada, yada. And I'm looking at some of our rents that we're charging some of our long-term tenants, $790, $850. These are almost unheard of deals. We wouldn't rent a home in Charlotte right now for less than $1,000. And if you have a couple of those, they add up. You could be potentially losing out on $1,000 a month, $12,000 a year. Those are game changing figures. But what I'm trying to probably get to as the point of why I made this video is, you have to have a hedge against inflation. We don't know what's going to go on. There is uncertainty, but Peter Schiff will tell you gold. I'll tell you real estate in the right market. Charlotte is an emerging market. It is growing. Real estate here is stupidly appreciating. Wish I had bought more, and I just didn't have the knowledge. And I want to say I didn't have the means, but I probably have the means. I just didn't have the knowledge. So, but that's okay. We've made good decisions, and we have a good base for our business. I think that we'll definitely be okay. But rents will continue to rise, and with that, you're going to get more money every year. We typically put a 2.9% increase in our leases, so that when there's every single year we're going to get a little bit more money. 2.9. It's about inflation and stuff like that. And if people actually turn over, then it's going to cost us a little bit of money to get them up and running, but we're going to get more money for them. So anyways, these are my thoughts. What are your thoughts? Leave them in the comments section below. Like, share, subscribe, and if you stayed until the end of this video, you are the only one. I wish you success.